Hello and welcome back to my YouTube channel. It is a Friday afternoon and I'll tackle the question. This is the paper that was done in the morning for December 2024, and that's business data analytics paper. So I'll read the question. So I'll start with question 21. So Workway Limited is a public entity which has grown in recent years by acquiring established business entities. The directors of Workway Limited have identified two potential entities targeted for a takeover. The directors believe that the shareholders of the two target companies will be receptive to a takeover. As a prerequisite to the takeover decision, the directors have tasked a firm of consultants to carry out a cross-sectional analysis of the financial statements of the two potential target companies which operate in the same industrial sector. The financial statements of the two entities as of 30th September 2024 are shown below. So we have statement of profit or loss for the year ended 30th September 2024 from revenue all the way to the profit for the year. Then we have RIM Limited and Pupino Limited. So these are the companies that are due for takeover. These are the companies that are due for takeover. So we also have statement of financial position as of 30th September 2024, both for REMI Limited and Pupino Limited. So required A, common size statements of profit or loss for the two entities for the year ended 30th September 2024. Yeah. B, common size statement of financial position as of 30th September 2024. C, advise the directors of Workway Limited on the best company for takeover. Yeah, so we'll start with doing the common size statement. Yeah, so we'll start with the common size statement analysis. So I'll do it here. Yeah, so I'll see common size statement. Analysis for profit or loss. Profit or loss. Yes, I'll bold that. Okay, so we'll have for Remy and Pupino. The shillings are in thousands. So I'll start with the revenue. So I told you that when you are doing common size statement for profit or loss, the base is always the revenue. So the revenue will serve as the base. So this is a vertical analysis. Yeah, this is a vertical analysis. So we'll all do for Remy, then we do for Pupino Limited. So I'll start with Remy. So just say equals 2, then you take 87,500, you divide by 87,500. But remember the base, which is 87,500 is the base. So that base we lock it completely because it will be constant all through. So I'll lock it completely by introducing the dollar sign before and after the column. In this case, my column is B. So you enter. So once you enter, you'll get 1, which means it's 100%. So after you are locked correctly, you just drag. Yeah, you'll drag for Remy Limited. So you just drag that way up to the profit for the year. So allow me just to indicate here Remy Limited. So I'll copy Remy Limited, then here I'll do for Pupino Limited. So I'll also bold this. Also bold this. Well, yeah, so I'll change this into percentage. So just highlight and to go to home, then you go where there's general, then you change everything into percentage. Yeah. So by that, I'm done with the common size statement analysis for profit or loss for Remy Limited. Then I now go to Popino and do the same. So for Popino Limited, I'll take 140, which is the revenue. I'll divide by the base, which is revenue. But for the base, I'll lock it completely. So I'll create a dollar sign. I'll put a dollar sign before and after the column C. Then I enter. So once you enter, obviously you'll get the 100%. Then you just drag. So once you drag, you just go to home and you change into percentage. As simple as such. Yeah, and that you get your marks. Yeah, you are done with part A of that question. Yeah, you are done with that part A of that question, and you get yourself. I don't know the marks they are located, but I assume that the marks might be 8, 8, then on the advice, maybe 4. Yeah. Yeah, so you'll get your 8 marks by just doing that. So you are done with that. So I'll go to statement of financial position. So I'll come here and say common size statement. The statement for statement financial position. Financial position. So I'll bold that and yeah, I'll do that. Then I'll just copy the name. We'll have Remy Limited. And we'll also have Popino Limited, that other side. Yeah. Yeah, so the analysis is not on shillings, so it's not necessary. So I'll just jump and start with property. And I told you that when you are doing the analysis, the vertical analysis for statement of financial position, the base is always the total asset. So the total asset remain the base. So for Remy Limited, let me just bold it here. So for Remy, so equals 2. So I'll pick this, but I'll divide by the base. Yeah, the base is always the total asset. Yeah, so I'll divide by that. And because that total asset is the base, so I'll lock it completely because it will be constant all through. It will be constant all through. So I'll enter. So once I enter that, I can just drag all the way. And all the way up to total equity and liability. Yeah, and you can see when I drag, I see the values appear automatically. So that when you click this one, you'll see it's B39. You divide by B41, which is the base. This was B38. Yeah. So, yeah. So it means that we are correct. So where we have 0, 0, there were no values. So just delete. We delete also that one. We delete that value. We delete that. We also delete this. Here there was no value. You delete. Yeah, then you have that value there. Okay, so you highlight this and you change them into percentage. So I just start there. And I change that into percentage. Yeah. Yeah, so you can see this was 0.0%, right of use to asset. Then, yeah, we are also supposed to have 0%, yeah, because we had an item there. So it's supposed to be 0% also, that one. Yeah, so that's okay. So that's how you do the common size statement for financial position. So the key thing is the base here is the total asset. So you can see the total asset here is 100%, And we will realize also that total equity and liability is also 100% because they are always equal. So I'll go to Popino Limited and I'll check. I'll do the same, yeah. So I'll take 10,500 and I'll divide the base with the base, which is the total asset, which is 66,500. So I'll lock that base completely by introducing a $sign before and after. Before and after. Then you just enter. So once you enter, you just drag, as simple as such. You just drag all the way. Then you go to on. Then you change everything there under 20%. Yeah, so just to be accurate, you check whether the total asset is 100%. Yeah, it's 100%. Then total equity and liability is also 100%. Yeah, so that's a confirmation that you have locked correctly and everything is correct. And that's how you are supposed to do part B of that question. Yeah, you take a minute to do that. Yeah, it saves you time. Then part C, advise the directors of Work Limited on the best company for takeover. Remember, Work Limited was presented with this information and they wanted to take over. They want to buy a company. So which company between Remy will you advise them to go for? Yeah, so first thing you'll check the profit for the year. Yeah, so the profit for the year after tax expense is 12,600 for Remy Limited. Popino, it's 10,500. So it means that Remy Limited is more profitable. So when you are giving your analysis, your advice on profit, you will advise Work Limited to take over Remy Limited. But now the key thing now you have to check also is the asset base. So we'll check at the non-current asset, which company has more asset. Yeah. So when you check here, you'll realize that the non-current assets, yeah, because these are the assets which are there, we have 16,800. But when you look at Popino Limited, we have 36,050. But remember, there's right of use asset under Popino Limited. So this is an asset under lease, which is almost 17,500. So it's not a permanent asset for this company. So you have to take into consideration, though it's an asset, but it is a leased asset. So when you reduce that, you'll remain with 18,550. Yeah, so it means that Popino, when it comes to asset base, it's more than Remy Limited. So the other thing that we'll look at is the working capital, the current assets, the inventory, than the trade receivable. So let us see which one wins. So you look at the total assets, we have 33,600, but Popino Limited has 66,500. Yeah, so Popino still has more working capital than Remy. So that's again for non-current assets and even for the working capital, which are current assets. Popino has that what we call the liquidity. Yeah, the liquidity is on the side of Popino. Let us look at the equity. Yeah, the share. Yeah, so ordinary share capital, they have 3,500 for Remy, but here the ordinary share capital is 7,000. And even the total equity, it's more than that. Let us look at the liability, which is also key. So I'll look at the liability. Here there's no lease liability. We have lease liability on loans. This is much. This is less. Then trade payables, we have this. Lease liability, Popino does not have. This current tax, this pays so much tax. Yeah. So here, above all, you will advise Work Limited to take over Popino Limited because Popino Limited had an high asset base of 36,050 and a high working capital of 66,500. 500. So when it comes to advice, you give advice based on the non-current assets and the current assets and even the equities and liability. So in this case, you realize that Popino Limited wins more when it comes to even the ordinary share capital. Yeah, because share capital is the company. Yeah, you see it's 19,600. So it wins all through over Remi Limited. So you say that I'll advise, on the advice, I advise Workwe Limited to take over. Is it Poponi or Peponi? Popino. Popino to take over, sorry. To take over Popino Limited because it has a large asset base. Has a larger asset base. Sorry, let me say larger asset and equity base as compared to Remi Limited. Then again, now you see that will also depend with the percentages. Yeah. So I want to take one example. When you look at the percentage, you can see even this one on ordinary share capital, this was 10.42% of the total asset. But to realize that this equity is 10.53% of the total asset when you do the analysis. So it means that Popino Limited is the best company to go for in terms of takeover, because the common size statement is always used by investors. Yeah, it's used by investors to analyze, yeah, the developments in the company. Yeah, so above all, the profit is not key because the profit fluctuates. Yeah, so the key thing to use to analyze is a statement of financial position, the asset base and the equity base and the liability base. So that's how you're supposed to tackle that question. And you get yourself 20 marks. Yeah, this was a good question for you students. Yeah, so with that, you get your question. So thank you so much. If you're watching this video for the first time, take a minute or so to like this video, share and give your comments there. I've said that this paper has been done this afternoon. So I'm just recording the video 2 hours after the paper. Yeah, so put your comments there, give the likes, and our intake is also ongoing. Yeah, so if you join my classes early in January, I'll be able to prepare you well so that you can pass this business data analytics paper in your first attempt. Thank you so much and have a blessed evening. Thank you so much.